Good evening, everyone. This is Wayne, and this is the video version of the trade report for Thursday, April 5th, 2018. Well, the markets did close higher today, and volatility went lower, but volume was nowhere to be found. What does that mean for tomorrow's market? And how will the pre-market job report influence it? Stay tuned to find out more. Greetings, everyone, and thank you, as always, for joining me for a little while we go over the action and activity of the financial markets today, and we start off with the S&P Futures. And as a review, I'm sure it's still very clear in everyone's mind. However, I do like to make sure that I'm setting a baseline from which to provide you with the information of the day. As you recall, in not last night, but the night before's overnight session, the China trade tariffs were announced, and the market did not respond well. In fact, it was quite a cavalcade of selling that took place. However, when cooler heads prevailed, as it were, there was a little bit of activity to the upside. We had a little bit of a droop, and then it was all upward action in yesterday's session from there. A 90-point turnaround from this low to this high. Just a remarkable move. And even in the extended session last night, there was some additional buying that took place. So we had an up move followed by some more upside action. And I was expecting a higher day today. So the pre-market kind of fed into that. And when the market opened, we had a little bit of a pullback, but then we just started chopping around. And this is not atypical for the day before a big economic report. Tomorrow morning at 5:30 a.m. Pacific time, 8:30 a.m. Eastern time, the non-farm payroll report is going to be released. And it's usually a biggie. It's expected to be a very positive number. In other words, a lot of jobs are expected to have been made, or a lot of jobs will be reported to have been filled. So that theoretically should lower the unemployment number, and we'll just kind of see how it all plays out. But what happens is the algorithms, the computer-driven trading models, really get a hold of that number and they start playing around with the price in the market. So it's really not a time to be actively involved in the market, and you would do well to observe just to see where the emphasis of the energy in the market is after the final interpretation of that number begins to move the market more definitively. And that usually takes between 15 and 30 minutes. So we get a real jumpy market for about 15 minutes or so. And after about 30 minutes, we end up with a market that looks like, typically will look like, it is moving in a particular direction. But there's no way for me to say, okay, wait for 30 minutes and then start trading. No, that's not what I'm telling you. What I'm saying is the market becomes extremely twitchy. There's oftentimes big moves up and big moves down that ultimately balance out to the point where there is a direction that is associated with the move. So we'll have to see how that all plays out. Conversely, today's move, while the market was ultimately up, was really a chop fest. I mean, we went up and down, and these were semi-tradable moves, but there really wasn't any volume. And when you get movement without a lot of volume, and this is the volume profile down here. It's not, I'm sorry, not the volume profile. These are the volume bars that show how much volume there was. And you can see where in yesterday's session there was quite a bit more volume. The height of these bars here are much higher than these. So this was a very slow motion market today. Um, and that is not in keeping with what we've come used to. So traders need to acclimate to market conditions that present themselves on a daily basis if they're choosing to trade them. For me today, I was in observation mode. I took one trade this morning. I sold some S&P futures options puts, and that was a nice trade. That was a $325 profit trade. But I had several trades that I exited today. I exited my Amazon trade. I exited my DIA trade, which that's the diamonds. That's the Dow ETF. I exited my Boeing trade. Um, and I think there was one other one. I can't remember exactly what it was, but I did keep my volatility trade in the VXX, which is a volatility ETF. So right now, I'm not really quote unquote positioned for anything in particular, but I have a lot of dry powder. That's another way of saying cash. That I'm just waiting to see what the market's going to tell me tomorrow. So as I look at the overnight session as I always do. I'm really not expecting too much because the day before a big economic report like the job number is oftentimes not reacted to at all. It's usually a very quiet session. And that is what happened today. Now, the overnight session will probably be even quieter, even tighter of a trading range. So that's what I'm looking at. Of course, the only thing that would disrupt that would be a binary event of some sort that disrupted the flow of the market. Um, and that's always possible, but that's more the exception than the rule. But when it does happen, yes, the market moves big. So for now, I am I'm basically looking for an overnight market in the extended session that stays within value and probably even remains very tightly within value. And value is this area between the red line and the green line. And I really don't expect price to even move to those extremes. I really expect it to do something like this. That's about the extent of what I expect. Maybe a 10-point move from high to low in the extended session, which would really be a quiet market. But we'll see. That's my speculation. So this is the S&P futures. We basically had the same story in every index, the NASDAQ, the Dow, and the Russell futures, as well as the cash markets associated with those. So I didn't trade today except for that one trade that I just told you about, and I'm in mostly cash right now, just waiting for the job report tomorrow. So let's take a look at a few stocks that were kind of interesting today. Of course, Amazon. We'll take a look at that one first. And there's a couple other ones that we really haven't looked at yet that we will. But Amazon today basically did what I guess I would say, expecting it to do. And that was to go higher. And it went higher up to that 100% symmetry resistance line, which I was calling, sorry, symmetry support line, which is what I was calling for. And again, I'm just reminding you not to pat myself on the back, but to try to reinforce what I'm trying to convey and to, in some ways, teach, as it relates to how I look at the markets and why I come up with the thesis that I come up with and how I do it. But I'm using Fibonacci's. I'm also looking at the Ichimoku cloud. And on the lower time frames, I'm keeping the market profile in view. So if you recall last night, we looked at the Amazon close basically being run on top of the 1272 support line, which does become resistance once price goes through it. Now, I said yesterday that I do fully expect Amazon to move up to the 100% symmetry support line as well, but we'll probably find some resistance there. Even though it's not a true resistance line, it will present resistance, and that is exactly what happened. So the high price in Amazon today was 1459.56, and the 100% is 1456.19, but the close was below. So the 100% symmetry support that Amazon was trading below did serve as viable resistance, very healthy, very textbook, and Amazon was a very powerful mover today. And I exited my position very close to the open today. So, I mean, I got out with a pretty decent profit in my position. And sure, I could have made more if I'd hung on, but nobody knows what the market's going to do next. So I was very pleased with how it all played out. I did not re-enter for all the reasons I've already stated, but this is just another example of how the market moves and how technical analysis, specifically the Fibonacci levels, play a huge role in being able to create a trade thesis. So that's Amazon. Um, Interestingly, Boeing today uh, closed way up. It closed over almost 3% higher today. Now, Boeing has been in a downtrend ever since it had this really remarkable run that it had. And the high on Boeing was 371.60. Well, you can see how, downtrend has really afflicted the stock. And Boeing's a great stock, but you've got these trade tariffs that are coming in, and airplanes, jets were on that list from China. So yesterday, when Boeing opened, it opened up like almost $20 lower from the close of the day before. And it really looked a little bit sad, but buyers stepped in and just would not allow it to stay down. And as you can see, they continued today. Now, of course, the broader market assisted in that move higher. So, Boeing was really given a nice lift today, and that helped my Boeing position. And I exited for a nice profit. But you can see this downtrend line that I have here and how price really respected it here and here and here and here and here. And that's the way trend lines work. If you have a downward or an upward trend line, you will find that a trend line, once established, is very well respected. It's tantamount to support and resistance. In this case, it's resistance. But yesterday and the day before, you can see how the trend line was violated. On Tuesday, Boeing actually closed above the trend line. Now, that could be a bullish sign, but it needs confirmation the next day. And when we opened here, that pretty much took away any kind of confirmation that could have been found. But as soon as the market started moving up and we did close above that line again, it does require confirmation for this candle now. And we really got that today. So at this point, strictly from a technical perspective, based on this trend line, Boeing is now a buy. And this parabolic SAR technical indicator, and I talked about this once before too, these dots that are kind of riding above price, when they start occurring below price, that is the first step of the stock moving higher. So for me, it is my opinion that Boeing is a buy at this time. I am not ready to get in yet because of the job number, and I want one more level of confirmation. I want price to come back down and test this trend line and then move back up off of it. That will tell me that Boeing is ready to go higher. There's a lot of different strategies like that I utilize when I'm assessing a stock and building a position and developing a trade thesis. So that's Boeing. So the last one I want to show you today, besides the VIX, of course. In fact, let's just do the VIX now. Let's just do that thing. And I don't want to say get it out of the way, but basically the VIX did what I thought it was going to do because the broader market went up, and so the VIX went down. And the VIX actually lost a lot of energy today. It closed below 19. In fact, it closed at 18.94, down $1.12. And I do expect it to test this lower line here, which is at 18.25. Now, what happens when it hits that remains to be seen. I'm not necessarily looking for a collapse in the VIX any further than that. So there's a little bit of revealing left to be discovered, and I think this will all happen tomorrow. Whatever that job number is, I think we're going to get some significant movement in both directions that will probably take the VIX down to here, possibly back up again. But where it ends up, I have no clue at this point. But I do think this level will be tested. If it closes there or below, that means that our market has become quite bullish going into the weekend. If we begin gaining again in the VIX, obviously the market is trying to reestablish a foothold in a new dynamic that's been presented as a result of the job number. You know, there will be some economic data points that will be looked at above and beyond the job number, like interest rates and, you know, a number of other things that come into play. So there's the VIX. Now, the last one that I want to show you today is a strange one. I don't believe we've ever talked about this one before. Tesla. Don't know how, I mean, everybody's heard of Tesla, I think, but Tesla, from a technical standpoint, has been extremely weak. And this line right here that I'm not able to cover that well, trying to draw a line to show you what I'm talking about, this kind of not burgundy, maroon colored line that moves all the way through here. That's the 200 period moving average, and this is a daily chart. And you can see how when price dropped below that back in November of last year, it really respected that and stayed below it. And even when it went above it, it came back down, tried to recover, actually looked like it might be up above it for good at that point, and then collapsed below it again. Came back up. So you can see how it's been kind of riding that 200 period moving average. And then as of late, it's really taken a deep drop. Well, the last couple of trading sessions have really pushed price back to the upside. Now, we do have a couple of parabolic SAR dots, which indicate a bullish move, but we still have this 200 period moving average up here. Now, a couple other things that come into play here, and that is we've got this Ichimoku cloud, which is a positive cloud because it's yellow, and we have the 200 period moving average coming right into that cloud, and we have price moving upwards toward the cloud. Now, price will want to gravitate back toward that 200 period moving average, and that yellow cloud is providing the impetus for an attraction to the cloud and, by extension, the 200 period moving average. So bottom line here is I think that Tesla will continue to the upside, and I think it could actually get as high as about $325 a share. It closed today at $305, so I think it has probably another $20 in it, maybe $25. But when it gets to this area here, I think it's going to probably react to the resistance that will be associated with reaching that level. But if you're looking for a spec trade, Tesla's a wild one. A very small bullish position, like maybe a 325 strike price call in either the April or the May contract would, you know, again, totally speculative. I think there's a bullish bias here. This does not satisfy my criteria for entering the trade, but I know a lot of you are going to have different approaches to trading, and I'm trying to provide you with an idea that might fit your trading plan. But this does not fit my trading plan, but I find it interesting based on the dynamics of how price has behaved over the long term as well as the last few trading sessions. So I hope that helps, give you kind of a sense of what I do look at and what I do try to keep myself apprised of, even though I'm not necessarily going to be trading something myself. I'm going to be keeping it on my watch list and looking to see how it plays out. Um, it's so I think we should probably have some follow up on this. So the very last thing I want to go over, and you can see how price looks like it's beginning to fall a little bit in the extended session now, but again, even lower volume in the extended session than the regular session. The S&P. So the S&P, which yes, the S&P futures and the S&P are closely tied, but they are different instruments, and they aren't necessarily tied at the hip, so to speak. So what I was looking for in the S&P today, as you recall, the price went up, kind of bounced off that 786, that playful kind of trampoline elastic level of the 786, just kind of popped down a little bit, and then my expectation was that price would go up and touch this 100% symmetry support and probably get pushed back, and that's exactly what happened. We didn't quite make it all the way to the 100% symmetry resistance, but we did get up to, let's see, the high was 2672.08, and the 100% symmetry resistance is 2674.78. So we came within 2 points. That's close counts. I mean, it counts very well. Oftentimes it will get closer with the Fibonacci's, but that is absolutely that counts as a touch. Now, the candle in today's S&P basically closed as a fat body doji. That is telling me that this market is playing a waiting game, and that waiting game is associated with the job number. So are we going to go lower tomorrow, or are we going to go higher tomorrow? We won't know until after 5:30 tomorrow morning. So as we wait for the market to do what it's going to do, we'll just have to endure some veritable non-action in the market, which is fine. We can tend to other things in our lives while we're waiting for the job number. So we have a situation where tomorrow's session is, I have no thesis for tomorrow's session. I don't know if we're going higher or lower. All I know is that that job number is going to basically provide us with what we need to know, and how the market reacts to that will be how we set up our trade thesis if we end up deciding to have one and to involve ourselves. So I was asked a question in the trade report comments. And I shouldn't say I was asked a question. Somebody had left a comment from yesterday's video. They're a new member. They just joined the trade report Facebook group. And they said, I'm going to need to talk to you about what all that means. And I have a link posted in that commentary to basically set up a half-hour free consultation. And I do 2 of those a day. And you can schedule that appointment with me. That'll just kind of send me a calendar link for the appointment, and we can have a chat for 30 minutes. And I don't charge anything for that. Now, obviously, my desire is to have coaching clients, and I realize that I need to be able to provide you with the opportunity to talk with me, to answer your questions, and to evaluate me for whether or not you feel coaching is something that will benefit you, and if we can work together. So at any rate, I'm putting that out there because I was asked, or I was presented with that. So I'd like you all to take advantage of that if you're so inclined to. Please don't feel intimidated. I'm a pretty nice guy. I can be chatted with, and I know a lot about the financial markets. So if you're looking at bringing your trading game to the next level. If you're just starting out, you're not sure what to do or how to do it. That's the ideal right there for me. I love to coach new traders. There's so much to learn, and there's so much to know, and there's so much to be aware of, and it's very important to figure out where you fit into the enormous puzzle of the financial markets, because there's a puzzle piece space for everybody in the financial markets, but you need to be able to identify what that looks like and how you fit into it. So, at any rate, I would look forward to speaking with whomever of you chooses to do so. And as always, as if you're watching this on YouTube, if you could please subscribe to my channel, like the video, and leave a comment for me, I'd appreciate it. If you're watching this on Facebook, please leave a comment for me, and like the video. And I do like engagement, and I do love commentary. So I'll look forward to that. And as always, the Trade Report is brought to you by TradeAlerts.com, letting the market come to us. So with that, trade safe, trade what you see. Good night, and good trading.